Welcome back to my YouTube channel, and I apologize for the slight gap between this video and my previous video. And I promise to be much more regular going forward in terms of creating new videos. So, in today's video, we're going to be talking about how you can practically go about investing in the US markets as an Indian retail investor. A lot of you all reached out to me on Facebook, LinkedIn, asking me for practical steps on how they can go about investing. So I clearly found out that there is a lot of interest amongst Indian retail investors to invest in the US markets, which I think is great news. So in this video, we're going to be talking about what practical steps or what practical approaches you can take to go about investing in the US markets. Again, just a disclaimer, this is not investment or financial advice. You should do your own research. This is purely for educational purposes. So, how can we practically go about investing in the US markets? So there are basically 4 things you need to be aware of. In this video, I'll be covering 2 of them, which is what type of brokers you can approach and what type of stocks, or how should you pick stocks or should you pick mutual funds. In another video, the part 2 of this video, I'll be talking about what are the different types of costs and what are the taxation sort of angles to investing in the US market. So one thing that you really need to understand about investing in the US markets is that this is very nascent in India right now, in the sense that people are doing it, but it's not yet a full-fledged industry, or it's not fully been integrated into the Indian investment community per se. So a lot of rules and a lot of things are still developing, they're changing. So one thing I found out when researching on my own, when I read articles, when I went to SEBI's or RBI's website, is that a lot of things written in articles or written in that people speak about also change, and they're sort of different. So if you go to one article, if you go to one sort of website, they'll say something else. If you go somewhere else, they'll say something else. And SEBI and RBI's website, it's sort of difficult because it's written in a very verbose language, right? So the best thing, how you should actually approach this video, is that this video and the next one is you get all the information, and after that you will ultimately have to approach a broker anyway. It's not that just by looking at these videos you'll suddenly start investing. You'll obviously have to go through the process of calling up a broker, selecting your broker, selecting how to invest, understanding the whole process, and finally transferring the money from your bank account to your demat account, your trading account, and putting money in these stocks, right? But what this video and the next video will definitely give you is the knowledge and the financial literacy of what to talk about with your broker, so that your broker cannot fool you, so that the broker cannot impose any hidden charges on you. By looking and by listening to these videos, you will have a full understanding of what are the elements or what are the factors that you need to consider when you invest in the US market. So I've spoken a lot already. Let me get into the meat of things. So what type of brokers can you approach? So there are basically 3 types of brokers in this space that you can approach to invest in the US markets. The first are domestic brokers, then you have international brokers, and then you have apps and startups. So let me talk about apps and startups first. There's a company called Vested, Vested, I think that's their spelling, Vested, who are operating in this space and who give zero commission trading, and you don't need minimum balance requirements to trade and invest in the US markets. So you could either tie up, you could have your account with Vested. That is one approach you can go for. The second is you have international brokers like TD Ameritrade, Charles Schwab, Interactive Brokers, and so on and so forth, who have an India presence, who have India offices, and you can contact them and get onboarded with them. The third type, which is my preferred way, which is what I do personally, is to tie up with a domestic broker to get onboarded with them. Now there are advantages and disadvantages to all three of these. The apps or the startups like Vested, the international brokers, and domestic brokers like ICICI, HDFC, Axis, and so on and so forth. The advantage with the apps or the startups is that they're super digital, they're very easy, their interface is very nice, it's very easy to invest, and they give things like zero commission trading and so on and so forth, no minimum balance requirements. But the disadvantage that I've seen with apps and startups is that there's no human face, or there's no sort of it's kind of like with online shopping initially in India, where people were a little hesitant and did not trust apps and startups. It's the same with this. I am very old school and conservative, like especially in money matters, so I prefer to go with someone that's much more established than a startup or an app. And the second disadvantage with apps and startups is also that because their scale of operations is not as much as, say, a bank or an international or domestic broker, the exchange rate that you'll get, the rupee to dollar exchange rate you'll get, won't be as good. The transaction costs that you'll have to go through, which I'll be talking about in my next video, will be much more favorable when you onboard with a domestic or an international broker. So what are the advantages and disadvantages of international brokers then? International brokers offer the lowest brokerage charges when I researched. That's because they have a US presence, and because they have US subsidiaries and Indian subsidiaries, they can provide the lowest brokerage charges. But the disadvantage with US brokerages or with international brokers is that they usually have an account opening fee, and they also have an annual subscription fee or an annual maintenance charge. So you'll have to really weigh both of these things. The advantage with domestic brokers, let's talk about the advantages and disadvantages of dealing with domestic brokers. The advantage I find with domestic brokers is that there's always a human face who is like your relationship manager or your customer representative, who you can always contact if there's any issue. You do not, like, there's no annual subscription fee in most cases. The brokerage is also really low. The whole process is very simple, and as I'll be talking about, like what I do personally, I found some domestic brokers are so digital already that they're as good as apps or startups. The disadvantage with domestic brokers that I can think of is that maybe you won't have zero commission charges, or you won't really have the sexy interface that these apps may have. But as I said, I'm a little conservative and old school, especially with money. So I make sure that I am going with a well-reputed domestic financial institution that can give me good brokerage and that can give me a good experience. And so far my experience has been pretty good. So these are the three types of brokers that you can approach: apps or startups, domestic brokers, and international brokers. The second point, let's move on to the second point, which is how can you actually invest your money in terms of picking stocks or picking mutual funds or ETFs. Again, there are disadvantages and advantages to both. Let's talk about ETFs or mutual funds first. The advantage with mutual funds or ETFs is that you don't have to do any of the thinking, or you don't have to have any knowledge. You can simply trust their expertise, you can trust their professional judgment, and you just give your money to them and they invest it on your behalf. So you can sleep peacefully and you don't have to do any research on your end. But the disadvantage with ETFs and mutual funds, which I find like really annoying, is that you have to understand that in India, this is still a developing industry in and of itself. Most or 99% fund managers or mutual funds who you will give your money to, they'll simply invest in a US index, like they'll invest in a NASDAQ 100 or an S&P 500 or a Russell 2000 or something like that, which means the returns you'll be getting would be largely what the index already performs. You won't be picking individual stocks, which means if, for example, in the NASDAQ 100, Tesla's percentage is not that high, but if you pick Tesla as an individual stock, you can get much higher returns. For example, I've invested in these companies called Cloudflare, Butterfly Network, Lemonade. These type of niche emerging technology stocks which are very high growth, they are not being invested by these mutual funds. You know, these mutual funds, because they track the index, they track the major stocks like Google, Johnson & Johnson, Pfizer, etc., etc. They don't invest in these niche high growth stocks. So you'll be missing out on those returns if you go with an ETF or a mutual fund. You'll get your 10, 11, 12%, you'll get your basic index returns, but if you want to generate higher alpha, if you want to generate higher returns, if you want to invest in individual stocks, then I would say direct stock picking is much better, right? And then when we talk about direct stocks, the advantages are again that, you know, companies like Cloudflare or Butterfly Network, you won't get, no mutual fund manager in India has the knowledge or has currently, because it's a developing industry, because it's not at that advanced stage, they will simply invest in an index fund. They won't invest in these direct stocks. But the disadvantage is that yes, you will have to research on your own. You will have to know about these companies. And honestly, one of the objectives of my YouTube channel is to provide Indian retail investors sitting in India with exactly this kind of knowledge on what companies are good, what companies are investment worthy. Because I am sitting here in the US, I invest in the US markets, and I invest in the Indian market, so I understand the psychology of Indian investors who want to invest in the US markets. So broadly summarizing, in this video we've covered what stocks you can pick, how you can invest, like in terms of stocks or mutual funds and ETFs, and what brokers you can go through. In the next video, I'm going to be talking about what are the different types of costs that you can inquire and ask your broker about, so that they don't fool you or you have complete knowledge, and what's the tax implications of investing in the US markets. So I hope you like this video. Please like and subscribe to my channel, and I'll see you soon in the next video.